Well, good morning. It's Sunday, the 26th of November. Let's take a look at what's been happening at asset class this week. Well, a very busy week at asset class this week. Thankfully, it was a great week. Despite being Thanksgiving week here in the US, it was very busy for us. The early part of this week focusing on what we call our 4 quadrant sessions. So we had 3 or 4 of those this week, which is very unusual. They're sessions that we run with prospective clients to cover really the 4 most important areas of any launch of a new platform, namely the leadership definition of success, the technical requirements, just making sure that we play nicely with their existing technology, the operational requirements, so understanding the flows, the onboarding flows, the investment flows, and then finally the legal and compliance elements. So really they're the 4 quadrants that we focus on. As I say, running a number of those this week. Really great to see that, and hopefully indicative of the early signs of recovery. And on that point, wanted to take a look at some of the trends that we're seeing here in the market and perhaps some outlook for 2024. Well, the first of those, as I say, is an uptick in the growth end of the market. What I mean by that is private equity companies and venture capital companies investing in the growth stage of companies. I guess there's certainly a lot less risk at that end of the market, certainly less upside, but I think LPs looking for a little bit of a safe harbor in the market that we're in at the moment. Certainly still a little bit of carnage, a bit of clear out, and anticipating that 2024 is going to be it's going to be a challenging year for lots of startup companies. Certainly those that raised in their kind of C to A rounds will find it difficult for the next round unless they've got very solid metrics. But the upshot of that is a growth in the growth sector. So a lot more money being focused on that, and quite a few new funds amongst our base of clients. We operate 650 funds, work with 650 funds, should I say, globally, 85% of them here in the US, and many of them focused on that growth end of the market. So that's one of the first areas of focus, I think, for 2024. I think we'll see a lot more of that. So that's number one. The second area is the secondaries market, appropriately enough. There's been certainly a lot of chatter in the trade press around the growth of secondaries. There seems to be a lot of activity there. I do get the sense that there's some skepticism around the quality of some of the secondary offerings that are out there, just in talking to people who operate in that space. We're not doing very much in that space ourselves. We tend to work with primary fundraisers, and I guess some of the funds that we're working with, you could define as secondary, but really focus on distressed assets, things of that nature, in the commercial real estate and other asset classes. But that's an area that I think will still remain strong coming into 2024. Again, I think the quality will probably improve as people become more realistic about the valuations that they're placing on some of the secondary offerings that are out there. But trend to watch for 2024. That's number 2, the secondaries market. Number 3 is what's happening in the IPO market. Well, it's tough to say. There's been a couple of notable IPOs this year, Klaviyo, etc. I think if we look back at it historically, how they performed in a very short over a very short space of time, admittedly, it's not been great. So I think still rather tepid IPO market that we're dealing with here right now. There is certainly a lot more talk about upcoming IPOs in 2024, so it'll be good to watch that. I'm hoping that does gather some additional pace. Clearly, when you look at the market that we're in, there's really 2 sides to it. There's the investment side, but then there's also the need for exits. And I think having a healthy, vibrant IPO market is a good sign that, hey, yes, you can make these investments. There can be a 5 to 7, in some cases 10-year hold with a decent exit at the end. IPO averages are somewhere between 12 and 15 years right now, which is, it's an extended period of time. You need to have pretty patient capital in those funds. So I think a lot of people looking for some IPO activity this year. So that's the third one to watch, is the IPO market. And the fourth one is the early stage companies. So what is going to happen with those early stage, seed and A round companies? Well, I think there is certainly still a lot of activity in that market. A lot of deal flow, certainly, as companies are starting to realize, hey, our runway is coming towards the end. We need to get out there, and hopefully the market is a little bit more receptive now. So certainly a lot of activity there. We are seeing some funds come to that market looking for value. And so I think for companies that are far enough in their development of their go-to-market strategy, have identified their ICP, have reasonably decent fundamentals as much as you can at a seed or A stage, that there is still a market for that. It's tougher, it's going to take a little bit longer, but the market is still there. So still, I won't say bullish, but certainly upbeat about the early stage investment markets. And as I say, we're seeing funds come to market in that with a focus on that market. So if you're in that stage, the very best of luck to you. I think 2024 will be challenging, but if you focus on the fundamentals, then the opportunity is there to go raise. So that's number 4. Not an exhaustive list, but certainly some of the trends. I'm sure as we come into 2024, we'll come back to you with our predictions, or at least assessment of what's likely to be hot in 24. That's it for another week here at Asset Class. I hope wherever you are and whatever you're doing that you have a great week. And belated happy Thanksgiving to those who didn't watch last week's. Hope you had a relaxing downtime and you're ready to get back at it, much as we are, and close out the year strong here as we come into December. All right, take care.